welcome to your kickoff edition. It is Monday. It is the TraderMerlin show. Hope you had a great weekend out there, did something fun. I'm hoping that I actually corrected some color here. My friend Michael came over and actually helped me. He's a photographer, so he kind of helped me set up some of the graphics. But what happened is as soon as I logged into the show today, it was all completely off. So I'm hoping I don't look as pinkish. I'll be staying on top of the colors here, but I'm somewhat colorblind, so I could look really pink today, but whatever. Doesn't matter. It'll be part of the fun of the show to see what color Merlin is today. All right. We'll go through the markets recap at the end of the show today. Since I don't have a guest on, I'll be doing at the end, talking about kind of a market update and then go to open listener questions. But today I'm going to start off going into really right away with listener questions. Of course, actually a shout out to everybody. Les, you were like, you camp out. You're the first one in this room usually that says hi. So good to have you with us again, Les, from Cape Canaveral. Thomasina, Dana, Daryl, Jerry, Tom Barr. Hope you had a good class the other day. And Richard, good to have you with us. Thanks for the emails, by the way, as well. So let's start things off with listener questions. And there were three that struck out to me that were really led to the topic du jour today. Now, there were obviously more than this on the topic, but these are kind of the big ones I thought would steer the conversation. Keith says, Merlin, I've been struggling with inconsistency, big up days, big down days. Any suggestions? Now, of course, for anybody who's traded for any period of time, you know, this is generally a problem for novice traders, right? Because they just don't keep the losses in check. So that clearly is an element of trading plan. Next question. I'm going to get to read these three, and then I'll go to all of them as we progress through the show. Here is from Sarah. It says, everybody talks about a trading plan, but I can't find any good examples. Can you share yours with your viewers, please? Well, look. I'm not going to share my trading plan with you. I will give you all the components. I'm not going to literally send you a physical document, but I will tell you all of the many of the components out there. I don't usually go deep into my strategies or tactics. If you know core strategy, you pretty much know the way I'm trading anyway. But I'll run through a lot of the rules and components. If you follow the show long enough, you can start to hear what my rules and plan is, but I don't like to give people a physical copy of it for one main reason. People are inherently lazy, and they just want things to be done for them. Give me. Look, part of it is you got to do some work yourself. So I'll walk you through a bunch of the pieces that I use. That doesn't mean that you need to use those exactly. It will obviously need to be tailored to your personal situation, which we'll address on today's show as well. But I will definitely tell you more components, elements there. So Sarah, we'll get to your question. And lastly, I had from Lynn, how do you deal with losing days? They drive me crazy. Well, I think that kind of tied a little bit into Keith's conversation at the very beginning, which was talking about dealing with big up days and big down days. Look, losing days are part of this game. No matter what, you simply have to acknowledge and embrace it, hug it, and say, it's okay to lose. It's totally fine to lose. It's just the big losing days. So, Lynn, don't worry about losing days. They are what they are. Just don't let them be the blowout days. Which leads us to the topic du jour, which will be how to build a trading plan. All right, now I know we'll have a lot of feedback on this one too, as many of you are probably further along in that trade plan process and of creating your own and discovering what works for you and what doesn't work for you. For me, it really breaks down into four key components that make up your trading plan. It's like four big blocks if you had to make them like big chapters. The first one is, why are you doing this? Now, that's probably the easiest one for most people to answer. I'm doing it to make money. No, that's not the right answer. Number two on this list would be the rules that you trade by. And within that, there's subsets. So when I say rules, it's big subset rules, meaning what are the overall governing principles of your trading plan. And then the second subset there would be per trade rules. And I'll walk you through those here in a minute. So we've got your purpose for trading, the rules that you follow, and then you get into what everyone thinks is the most important part, but I don't believe it is, which is your strategy, right? We all have different things we like to look at. Most of you are Online Trading Academy graduates, so you're probably focusing on core strategy, which is fine, but you may have taken some other classes or learning from trial and error, and you've developed your own strategy, or you have the Jim Cramer buy strategy. Whatever it is, I can't poo-poo on your strategy. Bottom line is, it needs to work for you. And if the end result is that you're making money, then bravo. I have no gripe or qualms with your trading strategy. But if you're using a trading strategy and you're continually flipping and going from one style to the next, you have no proven track record, you don't do any review or analysis, then yeah, I'm probably going to be a bit hard on you for your trading plan. So why are you doing it? What are your rules? What's the strategy that you're implementing? And it could be a variety of different strategies. I'll walk you through a couple of ones I like to look at. And then the fourth one, which in relevance and importance, I would say is the second most important thing. First most important one is your rules. Second one is going to be your evaluation and review of your trading plan and your trading rules. For example, Brian, who was on Twitter, he just responded right away to it. And it was actually nice to see him say this. He says, I need to be more disciplined with mine with regards to his trading plan. He says, although I am more disciplined with my trading now. Right there, you can tell that he's looking at his trading plan and saying, okay, there's elements of this that I need to work on. Maybe this is getting better. Maybe this is getting worse. And we start to refine it down till we get a more cohesive document or a working document that we're trading with. So those are the four main things. Now, let's go all the way back. And let's see, Thomasina says, I still have the OTA template for the trading plan and still haven't filled it out. What? Thomasina, come on. You're one of my regulars on here. You're one of the darlings of the show. You're telling me you literally have the document, which, hint, hint, the guy who designed that is right here. It's been modified a bit over the years, but the whole reason the OTA has a trading plan class was because of me. I was like, guys, the most important piece of information a person can have. Because inside of your trading plan, you can start to break down psychology. What are you doing right? What are you doing wrong? What works? What doesn't work? All these different things come into play day in and day out. That's what makes somebody a professional trader. Now, when we have those Chicago guys on, you know, the real Chicago traders like your Bob Dunn, your Michael Young, your Craig Weil, your Bill Henner, you know, these guys, it was all about having rules and structure and discipline. And if you notice the common theme every time we have those guys on is none of them ever had the monster losing days. Well, I'm sure they had them, but you have one or two and you learn right away, okay, I can't be doing that anymore. To Lynn's point, you know, how do you deal with losses? Well, you deal with them by keeping them very, very small. So one of my rules, don't trade Best Buy. It was my biggest single losing trade was the Best Buy options trade, but I have nothing against Best Buy. It was just I don't like Best Buy, but I could trade Best Buy again. The ones I cannot trade will be Apple and Cisco. I haven't traded since 2001 on Cisco, so I guess I could remove that one from the trade as well. But yes, there are certain ones that we remove, and there is a reason for it. It's not just, oh, I don't like this one. I know that there's an emotional attachment to me when I trade Cisco. I know there's an emotional attachment to Apple and issues I have with it, so get rid of it. Move on. All right, so let's start at the top. How to build a trading plan. Okay. Now, when people are looking at the components of a trading plan, most are just thinking about the steps they need to make money. My feeling is that the most important stuff is in your head. It's the way that you approach it. It's your psychology, which is why I told you guys the first thing that I was looking at with regard to a trading plan is, why are you doing this? Okay. Now, we could say that we're doing this because we want to make money. Look, that's a given, okay? Don't use that as your reason for doing this. And what I mean by reason for doing this is, we had Kayla Christine on the program a couple weeks back. Just turned 30, traveling the world, trading, living what most people would say would be the dream lifestyle. For her, that was part of her plan. She wanted to be able to trade from anywhere in the world, so she developed her strategy. She worked at. That was her why. It wasn't to make a bunch of money. It was to make enough money to support her lifestyle. For others, some of the things I've seen in trading plans over the years is to support, a religious cause, to support your church or a community, to build different projects. For me, it's to travel someplace I've never been to for 2 weeks every year. Now, for those that know me well, I had a little bit of an anxiety issue. It came out of nowhere a couple years back. So the traveling has been a bit curtailed, but I've been working to get back on that, and I will be traveling again here soon. I want to experience as much as possible, because whether you get COVID, whether you get cancer, whether you just die of old age, we are all going to kick the bucket. We just don't know when. So get as many personal experiences as you can, because at the end of the day, when you have big bank accounts and you're dead, who cares? Hopefully at the afterlife, I have a lot of great experiences to go. So that's my why, would be to travel, to experience new things, to meet new people, and get all that life has to offer. If your goal is just to get a garage full of Ferraris, okay, to each their own. That wouldn't be for me, but you can write that down in your trading plan and have that as your goal. I try not to make mine monetary based. I try to make them more experience based and personal growth based. So that's the easy part, right? And in the scheme of those 4 components I told you, importance-wise, I'll put that at the bottom, right? That's not critical that you define that, but the reason I like to put that up front at the beginning of the trading plan is to remind you why you're doing this, right? To remind you that there is a bigger picture here. It's not just money. I'm doing this for a purpose, whether it's to change my lifestyle, to quit my 9 to 5, whatever it may be, there should be a higher purpose than just, I want to make a lot of money. FX Telepath says, took me pretty much 1 year to figure out my trading plan. Well, I will say congrats, but I'll also say it's not done, right? You all know that your trading plan is a perpetual work in progress. And the day that you kick the bucket or officially stop trading is the day that your trade plan is done. Because I've made changes to mine because of certain market dynamics, or maybe I learned a new asset class and I learned a new strategy I'm implementing. It's always going to be morphing. What I think FX, what you mean there is the heavy lifting pieces are done, right? You know your money management, you know your money management, you know your risk management, you know these things, and that's key. Richard says, Merlin, a trading plan is a work in progress for beginners until they understand what they need to be accomplished to be successful. Would you agree? I would say it's a work in progress for everybody, regardless of level or longevity. At the beginning, it's far more critical, right? If you don't have a trading plan at the beginning, you're going to be completely lost. And I'll give you a basic example. I'll try not to keep these ones crude. As you know, sometimes my example is a little bit off color, pink like my face. If you were going to get a house built, so let's say one of my dreams since a kid, having a name like Merlin, my parents cursed me with a magical name, I've always had an affinity to castles. I love castles, and my dream has always been to build a castle. No, I'm not talking about, some 40,000 square foot mansion. I'm talking like a 3,000 or 4,000 square foot home that has the facade that looks like a castle, and inside is all modern and new. Maybe it has a torture room upstairs or something like that, but something to lock the kids up. But exterior, I want it to look like a castle. That has been one of my financial goals forever. Now, to get there, if I wanted to build that house from scratch without any experience as a contractor, do you think I would ever build it? I don't think so. It might look like the Winchester Mystery House in Northern California, just a complete mess in shambles, right? Richard says you agree with me for once. It's about time. Mark your calendars, folks. Richard agrees with me today. It's April 12th. He's done it. If you don't have any background experience as a general contractor, and even the basics of just construction and geometry and physics, you're never going to build that house where it will stand the test of time. However, if I went and got a contractor's license and I had a plan on how to build that castle, then I am going to have a much higher probability of A, finishing the project, B, making it come out exactly the way that I want it to be, and C, stand the test of time. Is that not what our goals are as traders, right? To design what we want. That's the end goal of I want these goals. Number 2 is how to get there, the process of getting to that point. And number 3 would be making sure that once we get that plan in place, that we can consistently replicate that success and eliminate failure. So to me, it's the same thing about contracting, building a house. If you don't have any experience, you got to get some and understand how to build that plan. Now, even a general contractor, if he doesn't have a specific plan, yes, the castle will be built, the house will be built, but it will not be exactly the way that you wanted. It will have changed along the way. Now, the whole point of having the plan up front is so that you know what that destination is, what that goal or objective is, and then you know that you can start tailoring things to achieve that goal. To me, that makes it much easier. If you don't start out, if you're a beginner and you start without a plan, you're just going to be going for whatever you think works at that moment in time, and over the long run, you're going to end up failing. It's like building a house with no foundation. If you don't have a foundation, that house will come down at some point, especially in California with our earthquakes. All right, what else do I got here? I know one in Miami you can buy. I'd rather build mine. I'd rather know that I made it. And our bottom line is the exterior. You can hire there are some unbelievably amazing individuals at working with stucco. Like, you can make that exterior of a stucco house look like it's been around since the 1300s and be very castle-esque with a couple spires in the corners. It's the moat that could challenge and create problems, mosquitoes and all that. But anyway, but how do you even have the plan without knowledge? Great question, Algebra. And that's really about getting an education. Now, obviously, I'm an advocate for education. I still work with Online Trading Academy, but you guys see a lot of different instructors here for different organizations. I think it's important that you choose who you think fits your needs and purposes best. So you get knowledge about how trading works. You get knowledge about the mechanics of the specific market or markets that you're trading. From there, you implement a strategy. Now, you say, how do we implement that plan without a strategy? Well, that's the whole point. You start off with that written in your plan, saying, here is my objectives, right, to make money. How am I going to do that? Well, I'm going to start off by trading X amount of shares in the stock market, or X amount of contracts in futures, or X amount of lots in Forex, whatever the market is. And then you build a set for progression, meaning once I achieve a goal, then I can move higher and get bigger share size or quantity of shares or lots or contracts that I'm owning. So for me, if you don't have that plan in place, if you have no knowledge, it's hard to put that plan in place, right? So you shouldn't even really start trading until you have some knowledge of what you're doing. Once you do, then you can start to say, what is a realistic rate of return? When I was teaching the trade plan class for Online Trading Academy, it was phenomenal. I'd have guys come in and be like, oh yeah, well, I have a $10,000 account and my goal is to turn that into $300,000 by the end of the year. It's like, you realize that 8% is the average annual rate of return for the market. I'll do 10% just to be generous and give the benefit for easy numbers here. So if you have a $10,000 account and you make the average of 10% per year on a $10,000 account, you made $1,000, right? For most people, that's not enough. But if you think you're going to take a $10,000 account and turn that into $300,000 by the end of the year, not only is that unrealistic, but you're getting a better rate of return than pretty much any trader on the face of the planet other than some penny stock guy who got completely lucky and has no skill whatsoever. So that's the challenge, is saying, what is a realistic rate of return? And then how do I get from point A to ultimately point Z down the road at my end goal or end goals, as many people have multiple goals. So to long-winded answer there for algebra is, you get an education, you understand the basics, you start working with someone. If you can, get a mentor. That's Online Trading Academy put XLTs in place for a reason, so you can kind of see what goes on a daily basis. No one really does one-on-one mentoring anymore. It's just too expensive for the end user and for the person doing it, but usually there's group mentor things out there. And when you do go into one of these rooms, like XLT with OTA, make sure that you are asking questions. Keep them on topic, but certainly make sure that your questions are answered so you can figure out how to achieve your goals. Let's see, and could be applied to different aspects of life. Where did I miss the first part of the question? Yes, I definitely think that your trading plan is very similar to how you should map out your life. For example, you might have a friend of yours or somebody who has a specific goal or target or something they want to accomplish. Well, they're not going to go from point A to finishing that goal without a plan, without processes, without steps, without evaluation. Those things all need to be put in place to help that person get there. What do you think is a reasonable return for a swing trader? Well, first off, my answer there is simple. Your goal, and this is what's in my trading plan, is to beat the market every year, to beat the S&P 500. If I'm not beating the market, this is a very simple lesson for everybody out there. If you are not beating the S&P 500 consistently, meaning year after year, then stop trading, stop investing, and just put all your money in SPY and just hold SPY. Done. Just saved yourself a lot of grief. Your goal should be to beat the S&P, what's called creating alpha. If you're not creating alpha, then what's the point of doing this if you're not beating the market? So my goal is to beat the market. That said, if the market's down 30% and my portfolio is down 10%, I'm winning. I know it sounds horrible to say. I had a good year. If the market's down 30 and I'm only down 10, I did great compared to everybody else. But if the market's up 20% and I'm only up 5, I should have just bought SPY and called it a day, right? So that's my personal number. Now, FX, when you say what's a reasonable rate of return, too subjective. It's too difficult, especially with regulatory agencies, because they'll think, well, you're giving a false expectation. I don't know. I don't know what each individual person is getting or what they're earning. My goal would be to, if the market is returning 8 to 10%, then you should be beating that. That would be a reasonable rate of return, is to beat the market at least. What else we have? Maybe he was with a friend. Bernanke yelling at pal. My trading plan is very routine. Sometimes it can be very boring, but I'm consistent and still makes me a return. But I was told trading is about making money. If I wanted excitement, go skydiving. Correct, FX Green. Yes, it is about making money. Overall, that's a given, right? We know trading is about making money. But don't focus on that. Focus on the process of how you get your money. When you focus quite often on the end goal, you'll forget all the steps that are needed to get there. And that's where people end up blowing their accounts and washing out. All right, where else was I on this? I was looking at, we talked about, the why. So I got digressed with a lot of the questions out there, but let me circle back and kind of come in here. Okay, so let's go to Jerry, because I love when people disagree. That's totally fine. Everyone has an input. Jerry says, I disagree a little with Merlin's strategy is very important. I struggled from the hard red edge to swing trading, trying to stick with one strategy. It's vital, then move on to another. I disagree a little with Merlin's strategy. I'm not sure if I got the whole thing, but I think that if I'm reading this correctly, it's saying focus on one strategy, lock that one down, and then move on to another. And I would say yes for one particular reason. I don't just because I have my hand here. Let's say that your strategy has 5 key components or 5 key steps to it, right? Step 1, step 2, step 3, step 4, step 5. That's your strategy, right? And whatever that might be, moving averages, Bollinger Bands, Elliott waves, supply and demand, who cares? Let's just assume it has 5 steps. So once you get those 5 steps down and you're kind of mapping out, say, okay, I've got my process. I'm sticking to 1, 2, 3, 4, 5. I do that every time, and I'm starting to evaluate that on step 3. I have my most problems. So you refine, you get a little bit better, and then you start to figure out how you can get 3 to be the most solid piece of your trading plan, right, of that process. And then you look at whatever else is weakest. If after looking at all those different steps and saying, hey, I've refined it, it's just not clicking with me, it's not working, I'm not getting the results I want, you can change pieces of each step, but you got to do one at a time. For example, if I have 5 steps and I decide to change a little bit of step number 1, I can't change parts of step number 1, step number 2, and step number 3 because I won't know which one created what effect, right? I need to change one piece, experiment with that for a little bit, do 20, 30 trades and see what the results are. And then if you're still not getting what you want, maybe you put that one back in place and change another. But if you change 3 or 4 things at once, you're not going to figure out what you changed made the impact that was good or bad, right? So you got to do one thing, see if that works. Another thing, see if that works. It's like kind of like a chef. You add a little bit more salt to this batch, but you don't add 15 different things. You want to tweak it a little bit to see what is the noticeable impact from that one change that I made. Is it negligible? If it is, well, let's continue to make changes until I get the results that I want. Okay. I'm hoping that helped. The challenge, Jerry and others out there, is there's thousands of strategies. I mean, goodness, if you go to the Traders Expo and you just spend 2 days there, my rule for everybody is make sure you leave any sort of payment device, leave Apple Pay, leave your wallet, leave everything that you could buy something with in your hotel room or locked up at home, because these guys are amazing salesmen and they'll sell you anything out there. And a lot of it is just too good to be true. Yeah, I've seen a lot of strategies out there that just, you go, that cannot be possible. The guy who was guaranteeing 20% rate of return per month was pretty amazing. Okay, rules. So I've talked about big picture overall and then small per trade. Some of my big picture rules are pretty simple. It's basically making sure that I have limits in place. For example, I need to know how much money I can risk. That is probably number 1, is how much you can risk per day, per month, per week, or even per year. There needs to be circuit breakers. Just like there are for the market, you should have a circuit breaker for your portfolio. So for me as a day trader, which is what I love to do, although I have been doing a lot less of it lately because of content creation, as a day trader, $500 per day is my maximum daily stop loss as a day trader. If I lose, and so that's a monetary number. For some people, might be too much. For some people, might be too little. You have to find out what works best for you. And the easy way to do this is just imagine that you threw money out the window. Now, you learned, it was a learning lesson, but if you took losses, how big of a loss would it take for you to turn from a normal, calm, cuddly human being to a freaking gremlin that's going to kill somebody, right? There's a line in the sand there. For me, it's a little bit more than $500, but if I lose $500, I chalk it up to it's a cost of doing business, no big deal. I will make it up another day when I have a nice winning trade and I make $3,000, $4,000, $5,000, $10,000 on a trade. That's okay. What you can't have is a number that's so big that all of a sudden you turn bright red and you get angry, you're kicking the dog, you're cursing at people. Then you're screwing yourself for the long haul because psychologically you're damaged goods. You'll never want to have your loss so big it gets to that point where you become psychologically tortured and damaged by a trade. So find out your number. If it's $100, great. You're just going to have to trade very small share size until you get comfortable enough to accept bigger losses and take on more risk. Because remember, more risk, more reward. Those two go hand in hand. You can't get one without the other. So for me, $500 per day. Now, the other side of this, which I love to do, and I think this is critical for almost everybody here, is, and I think this goes back to, let me see the gentleman's questions that we started with. This one right here. Keith, who came in initially with this question. He says, Merlin, I've struggled with inconsistency. Big up days, big down days. Any suggestions? Yes, suggestions are very, very simple here. If you're having big up days and big down days, it tells me that you're probably trading too big a share size and you're not adhering to stops. So it goes right back to the second part of the trading plan, which is, what is your plan? What are your rules that you're following? If you set a daily stop loss limit or a loss limit per trade, then you wouldn't have big losses, would you? So let's say in this example, and Keith, if you're here, chime in. If you say big gains and big losses. So let's say a big up days, you're up $2,000. Big down days, you're down $2,000. If we have that sort of swing, up 2,000, down 2,000, okay, fine. That's great. I know it sounds silly. It's great, because what we can do now is we can focus on the reasons that we're losing 2,000, and before it gets there, cut that off at 500. And just think about it. If you make 2,000, you lose 1,000, you're still up $1,000. As long as you're 50-50, over a course of time, you're going to make money. So it's only the downside that matters here, Keith. So you say you're struggling with inconsistency, big up days, big down days. I would certainly like to go and look through, if this was my trading plan, and figure out what's causing that sort of volatility and why am I not getting consistency. But as a minimum step, Keith, just limit those losses. Cut them to 1,000, cut them to 500, or whatever ratio you need to make that equation pay you in the long run. And, we could, in reality, flip a coin and say we got a 50-50 chance of being right or wrong, right? So if you got a 50-50 chance, then as long as you keep your winners bigger than your losses, over time, it's a formula for making money, period. Okay, let's see what else. Merlin, would you recommend sim trading for beginners, and how long would you recommend to stay in sim? Not really. Here's why. I know this is going to sound rude. I apologize for the comment, but it's one that just hits home with most of us. Trading in simulator is like reading a Playboy magazine and saying that you've been with a member of the opposite sex. So it could be Playgirl as well, right? So you read that magazine and you're now imagining what it's like to be intimate with a member of the opposite, or same sex, whatever is your orientation, doesn't bother me. Bottom line is, that's not real. You don't have any emotion. Your heart's not pulsing. You're not sweating. You're not emotional about this. But that time when you are physically involved with somebody, oh, it's a different world, baby. Same thing with trading. I think that the reason simulated trading is great is it allows you to get used to driving the platform, right? Where's the hotkeys? How do I send orders? Where's my matrix? Get familiar with your trading platform? Yeah, use simulated trading. Fine. That's fine. Now, if that's how you plan on executing your trades, a lot of times simulators will give bad fills. They don't give good executions, or actually they give favorable executions. So you don't, in real life, you're not going to get that great of a fill. I would rather you start off trading, micro lots, or trading one share, because commissions are free now for most equity platforms. Get skin in the game, because if you got 10 shares on, it's not going to break the bank, but you're getting emotional a little bit about it. You're feeling what it's like to get involved with that security. And you're in sim mode, you don't get that. You're like, oh, I'm down $500 today, I'll just turn it off. You're down $500 in a real account, you can't turn it off and make it disappear. Different emotions. So I really, I really would make it a point to get out of sim as quick as possible. If you're someone who might not be comfortable with the computers themselves or platforms, then stay on sim until you feel comfortable with the platform. You got to be comfortable with your trading platform. But then once you are, open up real trades. And I know that this is something we talk about with Dr. Woody Johnson quite a bit. There is a lot of people out there. There are a lot of people out there who are too afraid to pull the trigger with real money. Just do it with a micro lot. It doesn't cost you almost anything. It's so cheap to trade a micro lot or trade a couple of shares. Big deal. It's not that big of a deal to get skin in the game. What do I say? If you've already traded, if you have 50% steady income, right, you probably won't make that much. Yes. I made 15% of my non-steady income last year, first year trading, so I'm happy. As you should be, Lori. Beating the market. Or what was the market return last year? Yes, because of that sell-off, I think we were down. I can't remember what we finished, but 15% a year, great. That's great. I mean, I think that's a very nice rate of return. And especially if you can compound that and get better and learn, evaluate your trading at the end of the year, and maybe next year you're up 18%. Next year you're up 22%, and start getting better and better. Maybe trading bigger share size, starts compounding. Awesome. You're good. I know. Well, I was just trying to use raving. I was trying to use something most people could relate to. So I said Playgirl or Playboy just to make it, for both genders out there. By the way, I don't know if anybody's seen his documentary I think it's on Netflix. It's pretty interesting, or Amazon Prime, the one about Hugh Hefner. Pretty interesting. Jerry says, simulation trading, you will never know inner self. Agreed. Okay, so I was on the rules, so I can big picture. How much time we got? Man, I was going to try to keep this at 30 minutes. Didn't happen. So the big overall rules, and then for each trade, this is obviously is very critical, where you have your entry, stop loss, price target mapped out. Now, I think I told you guys a story many times. A student that I taught years ago, I honestly didn't even remember the guy, but he was at one of my presentations I was giving in San Diego. And he came up to me after the presentation, says, hey, can I take you out to lunch? Long story short, we go to lunch, and he has this whole bag of stuff. And I'm like, oh, crap, here we go. I'm going to get 2 hours of trade review, and I just want to go have some fun and enjoy life. And he brought out his trade journal from when he first started. He goes, you encouraged me to start the trade journal. And he goes, I want you to see something here. And he showed me his trade journal, and the very beginning was cryptic. It was like, here's my entry, stop loss, price target. And then he started to show the progression over a couple of years, how he changed it. And by the end, he goes, I'm a consistent trader now. I'm doing everything I set out to do. And I looked at his trade journal, and every page, every trade that he made, he had a picture of the setup, entry, stop loss, price target. He had all the reasons why he wanted to make the trade. He had all the reasons of why he felt things could go against him if he was wrong. Everything was mapped out. And at the bottom, he would write a summary, a review of that trade to help him get better. And I was like, man, this is a lot of work. It's a ton of work. But if you're serious about it, that's the way you get better. So I call that the specific trade plan, where you do it for each individual trade that you make. That's a critical step. Number 3 was strategy. I don't know what's to say about this. I think I already covered this. Look, I don't care what strategy you use. I found one that works for me. You might be using, a moving average crossover system. Great, cool. I don't care. If it works, that's all that matters. And I've used moving average crossover systems before. Generally, they're a little bit lagging for me. Takes too long for a trade to come to market, so it doesn't work for me. But some of you may be using it, and it's making you money. Awesome. Keep doing it. What I would suggest, with whatever strategy you're using, maybe it's pattern formations or candlesticks or MACD, RSI, I don't care, review it, right? That's the final step of the trading plan, is review what you're doing. Every year, at minimum, you should have a review of your trading. It's easier if you do it monthly, so you can kind of have some trades in your mind fresh. If you are keeping a trade journal, you can star those entries too and say, hey, this was a really particularly learning lesson that I want to make sure I remember. And if there's components of that are so critical that you feel that are very critical to your success, I would say write those things down. You can put them on little yellow Post-it sticky notes and stick them around your trading room. The things that are critical. The things that are paramount to your success, you'll know what they are. How do you know what they are? Because you've made trades that have gone so horrifically wrong that you just don't want to get up in the morning. That you feel like laying in bed and you feel ill from your bad trades. Write down why that was. What did you do on that trade that caused you to feel that way? And make sure that you don't ever make that same mistake again. I think we've gone over the 10 laws of trading that I have on this show, which again may be different for everybody, but every one of those lessons has cost me well over $100,000. Well over. I mean, we're talking well over $1 million worth of stupid mistakes, 100,000 times 10, that I like to look at all the time. I could almost recite them from memory now, and 3 of them are almost the same thing. Don't let losers run. Don't add to losing positions. When in doubt, get out type of thing. Those are critical, and everybody makes those same mistakes, yet most people won't acknowledge it and learn from it. Could you do a show on your top favorite strategies? I mean, my favorite strategy is core strategy, supply and demand. What I can't do on the show is go into the demonstration of core strategy. I just don't want to go into that because that's Online Trading Academy's proprietary stuff, so they'll be crossing some lines. But I can go into some different strategies maybe in a show down the road. So in the last one here, we talked about evaluation. What exactly are you looking to do? Well, whether it's monthly or quarterly or annually, you want to look back and see what's working, what's not. My personal attitude is I don't focus so much on what's working. I like to know where I made the most because that means I might focus more attention in that area. For example, cryptocurrencies has been really good to me lately. So I'm putting a little bit more attention in cryptos and maybe more assets there because The trend is your friend. It's running strong. My account's been growing very aggressively. I will add more there. If there's areas where I'm doing very poorly, it was funny, a couple years back, I was doing great with Forex, and all of a sudden, I still don't know exactly what caused it. It's like I hit this wall, and it was like almost every single day, my Forex trading dropped significantly. And I was like, okay, well, I stopped trading Forex for a little bit, regrouped, and started back up slow. Just like a winning trade, you focus on your winners, let those winners run, but make sure you focus more intently on your losses and make sure you stop whatever it is that's causing you losses. The evaluation process allows you to do that, to discover, hey, you know what? Right around noon every day, I lose money. I can see it in my trading plan. I look at my journal, right around noon is where I lose a lot of money. Okay, you got 3 choices. You can continue to do what you're doing and lose money. You can try to fix whatever is happening at that moment in time, which could take a lot of time, or you can simply eliminate trading right around noon. Those are your 3 choices. Simplest one, quit trading right around noon. Dumbest one, keep doing what you're doing. Hardest one that might have the best long-term impact, figure out exactly what was going on with that trade around noon that's causing you to lose. These are all things that have to do with our aptitude for understanding, our willingness to do work and make sure we figure out what's going on. But it's all part of that review process. Have a journal. You can do a mechanical one. You can, have a little piece of paper one like this. You can do a trading journal on your computer where you just have the Word doc and you're writing everything down. But go back and evaluate it. I mean, if this was a business, I know we've got some business owners in here. A lot of people are running a business and they look and see what's selling, right? If you know that this shirt is the hottest item in the store, you're going to stock more like it. If this is the worst selling shirt in the store, you're not going to buy more of it. What's working, what's not? Where am I making my profit margins the best? What's the best trading time for me? Which market do I trade best? These are all things that evaluation process will help you discover. Okay, what did I miss? First year trading gives me negative 20% up on up market last year. That's not good. Well, algebra, and again, if that was your first year, you got to figure what were you doing right, what were you doing wrong. The challenge is if you don't have someone to work with, a community, it may be hard to figure out exactly what you're doing right and what you're doing wrong. Trade 1 share of Apple and get over it. Nah. And so for those who don't know, Apple is one. It's actually on page 3 of my trading plan. I'm not allowed to trade Apple ever again. And it's funny because Tom says, trade 1 share of Apple and get over it. Yes, in a lead by example kind of world, I could just say, and let's be honest, I could trade Apple right now, fine. But I leave it in there and it will be in there forever as a cornerstone of my discipline. I told myself I'm not going to trade shares of Apple. I have done an options trade on Apple. I bought some puts, which did well. But what I want to make sure is if I have something that's caused me losses, that I just mark it off. And so that's for me is biotechs, drug stocks, Apple, and Cisco. But Cisco is not written in the plan. It's more of a loose one. But Apple is written there for a reason. I want to look at it and go, okay, you know what? Those are rules I put in place for myself. I have to follow those. That's part of my cornerstone of my discipline. So thanks, Val. What else we got? Is there an extremely volatile strategy because I feel like it matches my personality? Well, you could talk about day trading, Eric. I mean, day trading is a very volatile world because you have to trade bigger share size. You're generally trading big blocks, whether it's lots in the futures market, lots in the Forex market or contracts in the futures market. You have to trade a lot, big share size, because you're only in it for a small amount of time. So if I do a swing trade and I'm trading, let's say, I don't know, Microsoft, I might be trying to make 10 points over the next couple weeks. Whereas if you're day trading, I'm not going to trade a few shares. I'm going to trade thousands of shares, knowing that I'm going to probably be making $1 within the day. So I have to compensate for that. So that's where the volatility is. It's dangerous and difficult to do, Eric. So if you do it, be careful. It's one that'll just start to drive you crazy from the short-term trading if you really start to get heavy like I was. My worst trades are my best. I learned from most of them. Yes, I made a statement years ago, which I had to be careful saying, which is I've never had a losing trade. Now, of course, someone's going to edit this show out and say, Merlin said I never had a losing trade. Of course, I've had thousands and thousands and thousands of losing trades. When I say I've never had a losing trade, I mean it from almost a figurative perspective where you have to learn from every trade. So if I lose money and I learn something from it, I don't consider it a loss, right? It costs me money. You learn something along the way. If you just lose money, you don't learn anything in the trade, yeah, that's a loss. So I look at it from that perspective because I'm trying to learn from every trade that I make because that's what I think will make me a better trader. Eliminate some of the bad stuff as well. All right, let's see. Last time I used a mental stop, it put me in a mental hospital. Well, I'm hoping that didn't literally happen, but yeah, mental stops are bad news. Mental stops are something a lot of people think work, and I'll use a mental stop. Doesn't work, guys. It's just not. Don't bother. You have a physical stop. Oh, Kastner, when are you gonna come on the show, buddy? I'm trying to get Kastner 42. Trying to get him on the show to talk options. I do my best to only lose money between market open and market close. Yeah. Well, good for you. Let's see. What other questions I have I think we got to them all. So we got Keith struggling with big up, big down days. That's easy. Just focus on those losses. And if you can, I would say try to focus on what's causing the big swings in here. Number 2 from Sarah. Everybody talks about trading plan, but I can't find any good examples. Can you share yours with me? Viewers, please. No, I'm not sharing my plan with you, but as you guys saw, I just did share my plan with you. I just didn't physically send it to you. You've got quite a big portion of what goes on in my mind, in my plan, that you can now put into action. And again, I think the biggest part here is to modify this to make sure it fits you. And lastly, how do you deal with losing days? They drive me crazy. Lynn, you just got to get to the point that those losses don't hurt anymore. You all know you're going to lose, period. If you don't want to lose, the answer is simple. Don't trade. Pick a different profession. Get into underwater basket weaving or crochet or something, but don't be a trader if losing bothers you, because it's going to happen. It's kind of like saying, I use this analogy all the time. When I drive to work, I got red lights. I hate hitting them. But you know what? I'll get to work. I'll get to my destination. I'm just going to have to deal with red lights every now and again. And you ever realize that sometimes when you get to the office or you get to a friend's house, you're like, hey, man, I just drove like 10 miles here, and I had every light green. Like, you boast about it. It's awesome. Of course, you always do the same thing also. I'm like, no, sorry. I hit every freaking red light on the way to your house. Those are stop losses. Big deal. It's part of the game. All right, any other last-minute questions that you want me to get to? Obviously, if you have deeper questions, you can probably email me. It's TraderMerlin@gmail.com. That's the easiest way you can get in touch with me. You can also put your comments down below the video on the YouTube channel. If you are looking for a different topic or something else, you can also email me there at TraderMerlin@gmail.com. I know we've got a couple of new people here today. If you are new, hit that subscribe button. And, of course, if you like today's show, give me a thumbs up. Now, I mentioned I would do a little bit of a market overview out there today, so why don't we just do... I guess a little bit of a market update, shall we? Where is my market update graph? There it is. Oh, so there you go. There is our market update. Now, when I talk about market update, I'm talking obviously about the equity markets today. We'll look at those major indexes and see what they did. We looked at gold last week. We had a breakout trade on gold, and it was sitting right on the top there. We said, is this the gold breakout? Didn't happen. Came right back down. Here is the gold chart. Actually, this is Bitcoin. We'll start at the bottom, work our way up to the top for our market update here. Gold came right back down into that range, and the yellow boxes disappeared here, but you guys can see that top horizontal line representing where we kind of broke above it and just came right back down very, very quickly. So we're back in the middle of that range. What's of interest here for me on gold is, are we going to break these lows we established a couple weeks ago? We'll have to wait and see on that one, but it was down a little bit today. Russell 2000 also showing a little bit of weakness, but really nothing noteworthy here. You guys notice it's forming a wedge. It's forming a symmetrical triangle, lower highs, higher lows. It's just forming an apex here. If we want, why don't we bring on the drawing tools here and just go like that? Oh boy, I love when I have snap mode on. Come on, turn that snap mode off so I can get a better picture. And there is the top portion of your triangle. Yeah. And we'll put the bottom line on here. The bottom's going to be a bit trickier. I'm not a really big fan of where this is looking at the bottom because it does all these tails, but roughly somewhere in there, I think you guys can see we are headed for an apex of this triangle. And, until something happens, Russell's not that exciting. 10-year. No big change here in the 10-year. Pretty much unchanged on the days. You guys can see by the candle there. Nasdaq, basically what you have here is called a hanging man. It's a double hanging man pattern back to back. Now, the all-time highs in the Nasdaq, which is what we're kissing right now, you have two of these candles in a row, which are called hanging man formations. They're technically supposed to be a reversal pattern, although I disagree with that. This is actually a very good sign of strength. These last two candles show you that it's sold off and then for whatever reason rallied back up and showing strength near the end of the day. So these are both actually, in my opinion, bullish candles, but we got to wait and see what happens when we get to these all-time highs here again, which are very, very close. Now, S&P, another all-time high, broken record time. This thing just doesn't feel like it's going to change anytime soon, so I got nothing really to say about the S&P. Wait for the pullbacks to buy in. Crude oil, Same thing as gold. Not as appealing because it's just pretty much sideways, even though today we had good ranges on gold or crude oil. But all in all, it's still basically just sideways, so I wouldn't be making trades unless I'm a day trader. Bitcoin. Oh, cryptos were great over the weekend. Had some real nice moves. My portfolio did nicely. Today we were down a bit. Right now it's showing at 65.45 for Bitcoin, but that's the futures price, which of course that is not correct. Futures is a forecast of the future. Right now, Bitcoin trading, I believe, at 59,958 on the session. So that was pretty much it for your market update, and I hope you guys enjoyed that one. All right, let me go back to last minute questions here. When Brian, you are very smart. You're a smart dude. Before you close, any thoughts on Wednesday's coin IPO? Well, yeah, thoughts are it's going to be probably the most talked about epic IPO this year. I can't see anything in the pipeline that is going to make it crash. I think what'll happen is you're going to have huge swings on it. My personal thoughts are stay away from it. Don't touch it. Don't get greedy and think you're going to buy it at 350 and it jumps to 600 because it could come crashing back down. IPO days are always wild. I will watch it for sure because I think it's going to be one of those historic things that every newscaster will be talking about. And today, the IPO of Coinbase, it's going to be all over the place. I'm excited for the longer term picture. I think that it's phenomenal for cryptocurrencies. I think it's great that Coinbase is going to be doing this IPO. It means that they've passed some significant regulatory hurdles to get past the SEC to go public. That's monster. That is huge. So I think it opens the door to other companies. As I mentioned, I'm in backed BAKKT, which is a company that VIH is bringing public. You can now use your backed app and buy Starbucks coffees with Bitcoin. I actually just downloaded the back app. I'm actually going to go test it out probably tomorrow or in the next couple of days, where I'll be using a digital crypto wallet to buy different things. Go buy some Starbucks coffee and support the cause, because I think that is the future of it. But yeah, we'll talk closer on Wednesday probably. Well, tomorrow we'll talk a little bit more about it as well. But 14th is going to be a very, very exciting day. Crochet watching TV, would you like an Afghan Merlin? No. Dr. Bonnie's question. Yeah, we just went to Dr. Bonnie's question on Wednesday. But, what is there to know about the Coinbase thing? Right now, it's being pumped, right? And every media outlet is becoming the most talked about item. So it's going to have fanfare behind it. Watch it. Leave it alone. That's all I can say. How do you know if a transaction takes... Okay, how can you do that if a transaction takes more than 10 minutes? Because what happens is, from my understanding, they're doing the cash settlement on the back end. So you use the app, and you can actually, with theirs, you can buy Starbucks gift cards. So that's the way it's doing, is you're going to use that Bitcoin credit, stock up your card, your Starbucks card. So I'm trying to figure out the whole process right now as we speak. But yes, a lot of people, what they'll do is they'll guarantee the settlement, which could create some problems. But I'll get you more on that one, Raving, when I have better understanding of it. I didn't see that HSBC is banning MicroStrategy's trading. I didn't see that. That stock is just nuts. I think when we looked at it the other day, something like 80% of its net worth is in Bitcoin. That's dangerous, man. Very, very dangerous. It's rather interesting, though, when you look at MicroStrategy. Here's the chart of MicroStrategy. And you notice that since February, it's just been kind of listing sideways to down. Bitcoin, on the other hand, has been going up. So something is wrong here. Either MicroStrategy got a bit too overvalued and now people are realizing that. But, if Bitcoin's forming a great ascending triangle here, it's at all-time highs and just about to rip through, MicroStrategy should be moving up as well. Walter says, for long-term holding, you're talking about Coinbase? Or are you talking about MicroStrategy? Walter Merlin, I'm trying to get into some altcoins and I'm having trouble deciding what time frames to find zones to enter, stuck between daily and 60. Yeah, I wouldn't go down into too small and minutia on those time frames. 60 minutes fine if you're just looking for better entries. I like to do it on the dailies. So when I do, I'll look at the daily chart, map out those zones, and find the ones that, where I would like to buy back in. I'm actually really thinking, I'll let you guys know what happens in the next couple days, but I'm debating this week actually selling a lot of crypto, because I think what's going to happen is, it's just my idea, is that you're going to see a big move up in the crypto world because of what Coinbase brings to the table. But after that, there'll be a calming and things will sell off a bit, and I can sell high and buy back lower. It's a tough one because I really don't want to sell out any of my crypto. I'm more in a buy and hold position here. Jerry says Coinbase needs to hire humans now instead of AI automated services. It's not going to happen. It's the whole industry of cryptocurrencies and digital assets is lucky if you get help and tech support. I mentioned Kraken actually had a fairly decent chat function where I could tell I was chatting with a real human being because he was a jerk. You're not going to have rude AI. But most of them, it's not a high priority, which bothers me because customer service should be number one on the list. All right, last but not least, let's go to your economic calendar for tomorrow. There's really nothing going on with regards to earnings today. You had app for your report today. Tomorrow, there's nothing that's noteworthy on the earnings front. But Wednesday, Thursday, Friday bring us some monster earnings. We'll talk about that on tomorrow's show. Here's what we've got cooking for the U.S. markets. For the U.S. markets, I'm looking at CPI numbers. Now, remember, the PPI numbers came out higher than expected, posting a 4.2 annual year-over-year increase in inflation numbers. That's not good. Fed wants 2.5 to 3, 2 to 2.5, excuse me. So this is much higher than expected. We'll see what the CPI number comes out tomorrow morning at 5:30. That's an hour before the market's open. You guys can see right now, it's expected to come out at 0.5%. We had the same thing, but we actually had it come out at 1% for the PPI numbers. If that happens for CPI, you might get some market jitters as inflation is rearing its ugly head. You also have GDP estimates for British pound. And then we have a 30-year bond auction happening tomorrow. That's noteworthy because Bill Addis will be on the program talking about it. Today's bond auction actually went fairly decent. The bid-to-cover ratio was 2.4 on the 10-year, and it went to 1.68%. So yields increased, but there was still decent demand for it. So tomorrow, Bill Addis will be with us. Talking about bonds, talking about interest rates, maybe talking about the Fed's current action to help manipulate the yield curve even further. All right, that's going to do it for me, everybody. I told you I was going to do a 30-minute show, and I'm at 52. I just can't do it. It's like an addiction, man. I got to keep giving me a fix of the show. Anyway, hope you guys enjoyed it. If you did, give me a thumbs up. If you're new, hit that subscribe button. Tomorrow we'll have Bill Addis talking about bond markets, and as we will get more and more into the Coinbase IPO happening on Wednesday, we'll probably talk a little bit more about that one tomorrow. All right, everybody, that's going to do it for me. Take care. We'll see you tomorrow.